Yo,
Yo, bro, what's going on?
all good, all good. How we doing?
Not too bad. I feel a bit tired today for some reason. I feel a little bit exhausted. I feel like it's been a long day today. Man. Steven said he's gonna host a call today, but I don't think he's actually active, so I'm not too sure. There you go. Okay. There we go. Okay. Got some participants. We'll get started at 10 people, I think. I'm giving it a second. Okay, we just get started at 8 people. Doesn't look like there's that many people active today. By the looks of things. I don't know why I'm so tired today. Jeez. 8. There you go.
All
Okay.
right, so we have our last.
We're at 7. Nice. Okay, I'm just gonna get started. I think. What screen am I trying to share? This one. Okay. So let's talk. So we're at 8 people now. So today, guys, what I really wanted to go through with you is obviously what happened today, what actually happened in the markets today, the market open. Also, what I wanted to start with is just a little bit of risk management and how to manage your trades, because today was a really good example of how managing a position and knowing how to manage your risk saved us. Okay, so today isn't going to be too education heavy. We're just going to make it short and sweet today. One, because I'm feeling really exhausted and tired today. I've had a long day, had some stuff going on, but it's all good. We're all Gucci out here. But yeah. So thing I want to touch up on first is just risk management and how important it is. Okay, so everybody is as traders has gone through the stages of over leveraging and revenge trading, and I'm not going to touch on psychology today because that's I've got a cool plan for psychology, like completely on its own. But risk management is its own thing. So when you first get introduced to trading, you kind of get taught the golden rule. You kind of get taught to only risk up to 3% of your account. So what they'll say, whoever taught you, whoever you learnt off, is to risk 1 to 3% in your account, right? Oh yeah, 1 to 3%. And this is cool. This is definitely cool because this is gonna keep you within reason. This is gonna keep you from blowing your account ridiculously fast. But at the same time, I feel like this is wrong because I feel like you should only ever risk 1% of your account maximum. The reason I say that is because why would you want to risk more than 1%? Especially if you consider yourself a student, you consider yourself learning, you consider yourself, or you might consider your strategy not perfect, okay? Like, unless you do, cool, risk 3% of your account if that's what you're comfortable doing. But if you're a student and you're going through the struggles of losing money, blowing accounts, you should only be risking 1% of your account anyway. And let's think about that. With our strategy, what we need to understand is why it's different to other strategies. Why is it different to the average forex strategy? Just gonna mute a mic. Yeah, okay. So why is it different? And the big difference would be the risk to reward. Okay, the risk to reward. So this being what the average trader would use. So then you could understand maybe why they would want to risk more than 1% because 1% every win, it probably gets a little bit tedious for those guys. Probably gets a little bit annoying, and the process is gonna seem a little bit more slow. Okay, but when you learn to trade with a favorable risk to reward, something that looks a little bit more like this. Maybe say an average, say 1 to 5, 1 to 6, something like that. Okay, why does it matter if you're I mean, why should you want to risk more than 1%? Why would you want to risk more than 1%? Considering your potential gains is going to be 6% in your account, okay? And this is just the average, okay? I mean, for me personally, I'd say the average. When you really get to know the strategy, when you get to learn it, I'd say average is about 1 to 10, okay? For like TP1, it's going to be at least 1 to 10. So let me just move that so you can see that there, okay? So what does this actually mean for us? This means that risking 1%, we can afford to lose 10 times before we're actually losing any money. So, say for example, we're using a $100 account, £100 account. I'm in the UK, we use pounds here. So, £100 account, and you're risking 1%. So, what does 1% equate to? Yeah, it equates to £1, okay? £1. So, think about it, right? We can lose 10 trades in a row. So, let's do the maths. Times 10. So let me write this out. £1, 10. What am I doing right now? 10 times £1. Okay. So we can afford to lose this 10 times. Okay, and then we win one trade and we're still at break even. So why would you want to risk any more of your account than 1%? Especially if you have a favorable risk to reward. And the same with anything. It's the same with anything. Say you had say you were risking 3% of your account. Why would you want to do that? Because obviously, using the strategy, maybe the win rate may not be as accurate as say a 1 to 1, but you can afford to take those losses. You can actually afford to do it because you're risking 1% of your account. Okay, so you can afford to lose 10 times before you're actually losing any money. So another thing that I want to get into, I will touch on psychology a tiny little bit. Sometimes when we learn a new strategy, when we take advice or a signal or a trade setup from someone you may consider, or someone you may look up to, or someone you may consider a leader or a mentor of yours, it's gonna make you want to over leverage. It's gonna make you think, oh right, this setup is sent by him, so this is definitely gonna hit take profit. I might as well risk 5% on this account, and it's just where you're gonna fuck yourself up. It's gonna happen again and again and again, and you'll never be successful because you have to. The thing about forex is the thing that makes it difficult is you kind of have to be your own boss. So you need to set your own rules and stick to them, and that can be hard. Okay, it's hard enough sticking to somebody else's rules, but when you are the boss, I mean, it's easy to bend your own rules because who's gonna tell you off? Because if you're not being disciplined on yourself, it's just not gonna work out for you. You kind of have to set your own rules and stick to them. So only ever risk 1% of your account. Me personally, on the majority of my setups, I'll risk 0.5% every single time because I'm happy with the payout that's going to give me. Also, I understand that I can afford to lose more, and it just works. Okay, that then I can afford to lose so many more times before I'm losing money. So many more times. Okay, so that being said, one thing I want to talk about is trade management. Before I get into what happened today, I want to talk about trade management and why it is so important to understand how to manage your trade. So let's use an example here, okay? So let's say we have an entry. Let's let's do some drawings. Let's say we're in a downtrend like this, and something like this happens, okay? And say for example, I can get rid of this. Say for example, my entry is here, okay? This is where I want to sell from, okay? This is where I want to sell from. And my TP1 is here, so let me just pull out my position. So it looks something like, oh, that's the wrong one. It looks something like this, okay? So my TP1 is just down the bottom. Stop loss above the high. Entry right there, okay? So that's a 1 to 4, okay? So when it comes to trade management, this kind of links in with understanding the skill set a little bit, because once you're actually able to understand the skill set, understanding where demand is in the market, what you will find is, as long as your zone is correct, say it is correct, demand or supply within order flow, within structure, within all the things we talked to you guys about, you will get a reaction from your zone. Whether this happens, whether that happens, or whether this happens, you'll always get that initial reaction. And that's cool. Like, with this strategy, that's what I love about it, okay? That's what I love about supply and demand zones. You'll always get a reaction from them, because that's how the market moves, between supply and demand. The only time you're going to be wrong is if you're on the wrong side of the market. Say, for example, you're trying to sell off a supply zone when demand is in control. This is what's going to happen. But say supply is truly in control, you'll get the drop, okay? But the beauty of it is, obviously sometimes the market is going to reverse at times that isn't going to work around you. So supply may be in control, but as price gets to your entry, it might switch to demand. You might be very unlucky and it might switch to demand, okay? So that's actually what happened today, but we're going to go over that. But the beauty of it is, when it comes to supply and demand zones, you always get a reaction, and you can use that to your advantage, okay? So this trade, say for example, so risk 1%, it went 1% in profit. So out of a potential 4.2, it went 1% in profit. Ask yourself, okay, how many times have you been in a trade and you can do a couple things, okay? You're going to see profits. You might be a consistent loser, and you might see profits and just close the trade and be happy with that 1%, when there isn't sticking to your own rules, that isn't being disciplined, okay? Another thing you might do is just get so excited you don't know what to do, so you just leave it. And how many times have a trade just reversed on you, okay? There's something called breaking even. There's something called taking your risk out the trade. There's something called taking partial profits, okay? So there's plenty of ways you can deal with this, okay? One thing you guys need to understand about institutional traders is, especially for you guys that do already trade institutional, is you're going to see them post charts like this with a risk reward like this, okay? With a 1 to 12 risk reward, they'll be like, yep, hit this 1 to 12. When really, you don't know what happened behind closed doors. You don't know that they only risked 0.5% for that trade. You don't know that they took, I don't know, like 0.20 lots off here and 0.50 lots off here. So, in fact, they only made about 4% off this trade, 4% off this trade, okay? But it looks like they made 12%. That's what I'm trying to get at. You need to be able to manage your trade, and even though that may not seem cool to you or getting the most out of your trade, they've managed that trade. They've made it so no matter what, they've made a profit. Even if it turns into a loss, they've made a profit. So, back to our example, like I said, we're always going to get a reaction from valid supply or demand zones. So, once you do get your reaction, you have to protect yourself, okay? There's a couple things you can do. You can either completely take your risk out, so you can take out impartial profits, whatever you was risking, so then that allows price action to come back and stop you out at break even. So when it hits your actual stop loss, it will be break even because you've taken your risk out of the trade. Another thing you can do is break even straight away. Like, Pete will tell you, I am an absolute sucker for breaking even. I love it. I love the fact that I can enter any position and just break even straight away, because I know my zone is valid and I'm going to get a reaction. And that's just the way I trade. Me personally, what I'll do is I'll wait for a reaction. As soon as I get that slight impulse, I'll take like the tiniest percentage off my trade. So something that I'm happy with. So say I'm trading with £100 risk, I'll take off like 15 or £20, something that can be like, yeah, I could have went to work today and I could have made that much money. So no matter what happens, I'm cool because I've got that 20, £30, okay? So I take it straight out and I'll break even and I won't look at the trade till it either hits take profit or it will break me even, okay? And that's what it comes down to. It comes down to just being able to manage your trade, being able to understand that you can take profits. It's not a bad thing to take profits early, and it's not a bad thing to break even, because even if you you're breaking even all the time, that one time that price didn't return to break even, you've still made wins without actually losing any money. And I can show you that today. Okay, so looking at what happened today, let's have a look. So I woke up early for London today, which I do every day, and let's actually have a look. So let's go to the 15-minute time frame. Yeah, so times. So 7:45. My alarm was set today for 7:45, and no. Yeah, it was set for, what's it set for? It's set for half seven, and it was set for 7:45. So it's half seven. I woke up. I looked at what happened, and I understood that we kind of made equal highs. On Oanda, we made perfect equal highs. I do check both data providers, but the thing is, all my markups are on FXCM. I will make the switch, but I just can't be bothered yet because I'm lazy. But these are equal highs on Oanda.
Man, you're saying it every day. I hate you for it.
I say every day. But yeah, we made equal highs, okay, around half seven. So I thought I might as well get the extra 15 minutes. So I went back to sleep and woke up at 7:45, and I understood what was happening. So it was right here. So what I was kind of hoping was we'd come up, take the highs, then we could get major reversal, major pullback, and hopefully this could be the pullback that takes out all this liquidity, because this is a very overextended pair right now. But besides the point, that's not what happened. We just left those equal highs. So in the back of my mind, I was thinking, that makes things awkward because now I haven't got any clean sells. Where am I gonna buy from? I didn't really notice this first thing, but when we got the drop, and I was on a live session, I was live streaming with Peter, and actually no, it's just Steven as of this point, not Steven, Mark as of this point. But I started looking for buyers. I started looking for where could demand come into the market, and it was actually really nice. So going back to our education and what we've been learning, what can we see here? We see structure playing out, bullish structure. I see these equal highs we could use as a potential target, and I can see bullish order flow. Remember this? We get the reaction, we get the bullish reaction, bullish reaction, bullish reaction. So I look for that area of unmitigated demand, understanding that demand is in control of this market at this given time. So understanding here, we just see healthy price action. We see the wicks coming down to overlap to mitigate previous candles. So we get this one, okay? So this candle here, it left imbalance and there was a big impulse, and it's not mitigated, okay? And what else do I see? I see failed attempts to come back and mitigate this candle. And what do we call that? We call that internal liquidity, remember? So this is where people are too impatient for price to come back into the actual buy zone. So all these people trading this trend line, all these people who had entries here, this is all just resting liquidity waiting to be swiped, and this is why this happened, okay? This also happened because this would be seen as a resistance line, and it's there to kind of endure the sellers, which actually did work out for them today, which is fine. But besides the point, this is our point of interest, and we did actually get the reaction. Okay, so let me go to the 5 minute. I'm pretty sure my entry is on the, what was it on? I can't remember. We'll go there. I think it was on the 1 minute actually. So yeah,
The best explanation there is 50% of 1 hour look. I found it out. It's like 1 hour is looking so clean. It was taking liquidity and following everything. You
yeah.
don't need lower time frame.
But I'm just trying to gauge where I got in for this entry because I want to talk about how we managed this trade, how we managed to turn losers into winners. Okay, so besides the point, doesn't matter where we got in. I can show you. I'm pretty sure it was a 1 minute candle. Yeah, it was a rally based rally candle. Remember those ones we look out for on the 3 minute, but on the 1 minute, it was just this. I used 50% of the wick to this, because the reason I use this is because this point was the last point before the big imbalances happened, and we had no sign of mitigation. So price had to come into this region. So I played it safe. I marked out 50% of the wick to the bottom of this candle here for price to react in this zone. So when price come in, we just took a buy. Okay, so let me go back to the, let's go to the 5 minute. Okay, so this is our point of interest, and we got the reaction, which is cool. So we was buying, and if you was on the live stream today, you would have caught this buy as well. So yeah, we was in this buy, which is really nice. And when it comes down to managing trades, what happened? We get the impulse, so what do? I take some partial profits and I break even. Okay, so I've already taken like, I don't know, like 10% of this position. So we get a reaction, and when we get this distribution, when we get to structure points, this is when it comes down to managing your trade, understanding where you're going to take some partials. So here, take 50% off because we're at pretty much, I don't know, we're about 75% the way to our TP anyway, and I wasn't going to take it any higher than this, so I took 50% off, which is just managing the trade. And look what happened. It come down, and automatically, this is just, there's high supply here, so I was thinking this is still bullish. But as you can see, unexpectedly, supply took control of this market, okay? Whether it's to do with the trend line that was perfectly formed, it doesn't matter. Supply took control of this market. So as I'm trying to get more entries here, this one we didn't take, but as you can see, this one we did. I'm pretty sure this is the 1 minute price action. This happened, and I can just show you the same thing again. Okay, so
I'm gonna show order flow then, if you want.
okay,
There was a very nice order flow.
yeah, we can do that. But as you can see, just last point of interest. And why was this my point of interest? Because this is the last point before price really showed sign of bullishness, and we had no order flow, we had no mitigation. Okay, just straight imbalance. So I understood that price needed to come back to fill this imbalance. So when price did eventually get here, I didn't actually execute because I was unsure. But what did I wait for? We wait for breaker structure. Okay, so right here you can see breaker structure. We didn't exactly break supply, which wasn't the full sign of confidence, but we still broke 1 minute structure, which shows strength within the buyers. Okay, and here we have valid demand. We have that rally, base rally, or we call it institutional candle or order block. There's that last sell pressure before the imbalance happened. Okay, there was no mitigation here. We had failed attempts to come down here, and we had failed attempts to come down here. Okay, so these people, the impatient ones, this is the internal liquidity. So price come down, just entry, just straight entry on my phone. Okay, and this is when it comes down to managing the trade again. So as soon as you get to impulse, take like £20, £30 off, £40 off if I'm feeling like it, and then break even. Okay, so no matter what, even though I was wrong about this, even though supply took control of this market, we still managed to make profits. Okay, we still managed to make more profits than the average trader off losers. And that's why it's so important to be able to take partials, move your stop loss to break even, or if you feel like price could come back into your zone, take the risk out of your trade in partials so it has room to play about. And then if it does hit stop loss, it's just break even because you took the right amount of partials to account for what you was risking. Okay, little things, guys, it will just make you profitable. And as you can see, we've traded through, and supply is in control as of this moment. So there was a couple more setups that actually happened today. And before I hand it over to Peter, because this is a quick one today, guys, I just want to show you an entry this morning, which is really cool. I was looking out, but we didn't actually end up getting in because we was just observing, and I don't trade this pair. Wow, look what happened here. Jesus. This is actually a signal that got sent out, and again, we told the guys to take partial profits, so they probably made about 1% and break even. But yeah, this is what happens sometimes, guys. But besides the point, we had this today. We had, at this point, it was 3 minute, 5 minute, I think. Yeah, 5 minute candle. 1 second, guys. Yeah. Okay, come in. Okay, we're good. So yeah, so let me show you guys this. So today, this morning, yeah, this is morning again, 7:05. Yeah, we did not get in here, but we did get another touch here around 8 o'clock. But we had this kind of distribution thing happening, and what I was looking at was the bigger structure. We had this nice uptrend. Understanding we just took our high and we reacted off supply, was expecting retracement, right? So this was actually a really nice trade. So let me break it down to you guys. And remember yesterday how I was talking about the different candles that we use, and one of them being a drop based drop. And how do you know which ones to use? The ones that are followed by imbalance. See that imbalance? We didn't get the mitigation. Okay, so understanding that, we created these equal lows. This was target. Okay, so let's mark out the drop based drop candle, only because I didn't really find a clean one for you guys yesterday, so I just thought I'd use this one for the session today. So this drop based drop, see how they come back and use it, and you could just be targeting these lows, so your position could look something like this. Simple as that. Target these equal lows just here, 1 to 5, easy as that. Okay, and London session in New York session. You need to understand how to use sessions. Again, that's something we're gonna go over sessions on a session on its own. But yeah, I'm trying to keep it short and sweet today, guys. So I'm gonna hand it over to Peter. But before I do, I just want to say well, I'm so tired and my head's just shot away today. What did I want to say? Oh, okay, yeah. So if you guys could subscribe to our YouTube channel, because what we are doing are live trading sessions in the daytime. And we're trying to bring up a YouTube channel. There will be videos uploaded and there will be certain recordings left on there. So it's just Blue Wave Capital. I'll leave it in the chat. Oh, I'm not trying to type it on there. But yeah, Blue Wave Capital. And like I said, guys, go join the Telegram group and subscribe to the Instagram. But yeah, I'm gonna leave it there, guys, and Peter's gonna take the stage. And don't worry, tomorrow we're gonna make up for this sloppy call with some nice educational stuff. So wish you guys all the best. I'm gonna pass it over to Peter.
Let me share my screen. Yeah, look, I need to make news. Right. So let's go to look what happened on the GJ today. And there was pretty actually valid buy today. You guys did get over him. And now let me show you why this was valid buy for us. Let me start with 4 hours again. There's something in the chat. Yeah, see you, Luca. So I'm gonna end it then. Okay, so let me look at 4 hour what happened there. On 4 hour, the last what I can see is this high and this break of structure, right? So now I know that 4 hour is definitely bullish, and this is my low giving me this higher high. So we know what's our trading range right now. So this is my low, the trading range, right? And this is my high. By the way, this is not equal highs when you're gonna look properly, like you see. There's a difference, and you can just go to settings and click to yours, click Ohio values. So you're gonna see open, high, low, close. So you can just go to candle, and you're gonna see that high there is 0.334, and there is 0.844. You see, 141, and there's 141. There's two, there's one, so it's lower, it's not equal highs. So this is my high and this is my low of the 4 hour trading range, right? This is not my high low, because this low didn't give me higher high. If this will be higher high, then this will be valid. But right now, this is my last leg, giving me low and higher high. So I need to focus for everything what's happening there, and everything what's happening there is just a retracement until we break low or high. Until that point, this all is just a pullback or some way higher. But when we look to the 1 hour, so we know 4 hour is bullish right now, right? So let's say we are doing intraday trade only. So 4 hour is bullish, right? Now let's see what's in the 1 hour structure. So if we follow this drop, and then we're gonna see what's in there, in this internal structure, right? So we have this high, this low, high low, high high, and this was my last high. So this was my last low, bullish low, holding me bullish structure. If this low is gonna be taken, we are bearish, right? So this one was bearish break of structure. This was my high, low, and this was my high. So as we know that there was the, now let's focus for the bearish break of structure. So if we know that 1 hour was bearish, we were able to sell, right? And let's see from what we could sell there. This is high because my last low was what? Was this one. So what we see there, last point there was this base, right? Drop base drop. Let's go to 30 minutes. Okay, this one was mitigated, as you can see. This one, price did drop down. Price did broke this structure and then mitigated instantly this demand zone. This supply zone, I'm sorry, because this supply zone took out this demand zone. right? So there we had a demand zone. It was valid demand zone. Why? Because this low gave me higher high. So price had to come there and create a higher high and continue bullish trend, right? But it didn't happen. Market went up once. As it didn't create a higher high, this is our first sign that market might be bullish. As we see another top, price did make a new high and then broke structure. So this was break of structure. So we are now bearish in this, and we see mitigation of this. So this was a good entry. But as we know, 4 hour is bullish. Why we have a reason to sell? There's no reason for us to sell, right? Because we are only looking for trades which aligns with higher time frame structure. Because always, if you want to follow trend, you know, like trend is your friend. Everybody is taught it to. So just follow this. Just follow the trend, the major trend, higher time frame trend. Trend is your friend, right? So as we see there, this was my next demand zone, right? Supply zone. I'm sorry, because this was last. Oh, okay, or we can say this for it, because this was drop, base, and the drop, right? So we can say this wall was supply zone, and then which demand zone broke this supply? It was this and this impulse. So this demand zone created impulse, this impulse, which broke the holding supply zone, right? So we now just look for this candle. Let me go to the lower time frame. What happened there also? Oh. So let's follow the structure there. What was happening there? This is my high, and this is my low. This is my high. So this is my one low. This low gave me this high. Then I have, let's say, this high, this low, then this high, and this low. And in the same time, when we look for major structure, this was the supply zone, which was holding the market, right? This is that 30-minute pushback which we are looking for. Let me show you where we are, right there. See this supply zone. We had drawn this one. So on lower time frame, we can see it was only this phase. But now you can see how this demand zone was taking already supply zone. It wasn't this one, it was this one. So if you drop to lower time frame, what we can see as last candle taking this internal liquidity. It's this one, leaving also imbalance. So we draw that imbalance. And this is going to be by stop loss. And this is again, what is it? This is drop, base, that one candle, and rally. So this is my wallet demand zone. And it was also taking previous supply zone. So this is what we call demand oversupply. And you can see the reaction. We just stopped in, we got in. And then we were, as you know, we are targeting higher, but I was taking partials there and then there. And as I saw this drop, I was taking partials there. So I left really low volume and I got break even. But it ended in profit anyway. But let me show you 1 minute also what happened there, because 1 minute there was very nice. Or where it was. This first drop, or was it on 50? No, oh, it's this one, but it failed. So I think I'm gonna skip it rather, because failed accumulation is a redistribution, but we have a time for redistribution, and this just follow basic, as I show you, high time frame structure. So we know that 4 hour is bullish. This is my new high, this is my low. We look for 1 hour structure. If 1 hour structure is bullish also, we can just buy up. And this is what happened now. Like when you're gonna look for 50% of this. You see, oh wait, I'm not. This is right. It was not accurate. And you can see, this is why buys are happening now. Because you can also see this left imbalance. So market was just filling last imbalance in the price, mitigating the last order. And this is actually pretty stop hunt candle because it was taking liquidity from this low. And then we created structure, taking wall demand. So on the 1 hour, this is my supply demand zone, which took supply zone holding this market. So you can just buy there. So this was valid buy right now. But what I wanted to show you is how we can follow also order flow. This is gonna be on 1 minute, so don't get lost. But it's also working on the higher time frame. But it's so just nice example, so I wanna show you on the 1 minute. So let's see for these sessions, and the blue one is London Open. So we can see as we were taking Asia highs, activating those buy stops, and then we started dropping. Just every time we were just dropping. So let me see from what we were mitigating every time when we mitigated. So we know that this was my previous high, and we got a higher high. So this low created this high, right? So until this low isn't broken, we are still bullish. If this low would hold, we will go higher answer. But this low was broken, so we know we are bearish. Okay, so let's see what price left. And price left this one, but it was never mitigated. And then what we can see, we had this one, and it's what? It's an ready up, this one. Then we have base, and then we have a drop. So this is my base of ready base. Oh, I'm sorry. This is my ready base drop. So this is my valid supply zone. And look, price did just get there and fall down. And you can actually again wait for break of structure. So this was your high, this was your low, and then you have higher high. So this was your low, giving you high. So until this low is broken, we are fine. This low was broken, so we are bearish now. And look for just price it again, just mitigated a supply zone. Then again, we were just falling lower, breaking everything. After we broke this low, what happened? You see this supply zone, this order block. So okay, we just follow. Again, we just broke structure, and look what happened. Again, mitigation of supply zone. Then this is ugly, so I'm not gonna show you, but exactly you can see how price is still just mitigating every supply zone. Then you can see again, just broke structure, and the price did came back to mitigate and fall lower. We just broke structure. You can see this low gave me this high, just broke it. This one is lower, and price went back to mitigate it. Again, we broke this low by this move, and look what happened, guys. We just mitigated the supply zone. Again, we just broken with this move, and look what happened. Actually, this is ugly again, so yeah, 2 minutes clean. And you see what's happening right now. And by the way, by me, GJ just mitigated every supply zone which we had in this move. Only one unmitigated is this one. And it's also on 5 minutes. So this is what I'm looking for, by the way. But you guys see how beautiful this is? We just follow structure and wait for every low to be taken. And look, just break of structure, entry, break of structure, entry. Again, break of structure and you entering. Then break of structure, entry, break of structure. This is how you can intraday, but take the time for this. Don't do this on the lower time frame. You're just gonna lose everything because you need to follow every time frame you have on this market. And from beginners, I can really recommend you starting with daily, 4 hour and 1 hour. Like find your point of interest, find your order blocks on the 4 hour, 1 hour daily, and then just wait what's gonna price do on the lower time frame. For example, on 1 hour. So let's say we have our 4 hour point of interest there, and we wait until price on 1 hour start coming, creating again, just following bearish trend. So this low gave me this lower high, lower low, lower high, and then we have break of structure. So then you can go maybe, let's say 15-30 minute time frame, and you can look for what? For entry there. but only on the higher time frame point of interest, like 4 hours. I started trading like this way. I was trading like 1 to 3 months, and I was profitable with this. You just need to be patient. Of course, you are not gonna do 1 to 100 in first day. You're gonna do like 1 to 6, 1 to 7 week. But guys, 1 to 6, 6% per week. Are you crazy? Like, show me somebody doing it. This is big. So this is how you're gonna use confluence on every time frame. Everything need to make sense. So yeah, this is all from me, guys. We have 1 minute left, less than 1 minute. So I appreciate you that you've been there. I hope you took some notes. If you need anything, just drop us message. And yeah, we're gonna see you morning at the YouTube for the live stream. So don't miss it out, okay? So if any questions, drop into the Telegram. I think we don't have enough time. But yeah, have a good night, everyone.
Thanks, Peter.
Yeah, it's fine.
Bless you.
Please. I love you. I love you. No. No. You can't ever do anything for me. I bought you a secret surprise. You can't see. Right, I don't control you. Sam, you control me. Please, can I have 2 little pounds? Please, I'll give you £30 on Friday, I promise. Because I'm getting loads of money anyway, I'm getting like £100. And I don't even need any of it. What I'm doing, I'm not going out, I'm just trading in my bedroom every day, all day. Come on. Pardon? Yeah, you do, please, Sam. I'll give you £30 on Friday. I know you do have it. I'm gonna give you £50. Come on, please, Sam. You have 50. You have £30 in your savings. Sam, please, 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 I'll give you £30 on Friday, please. Please, Summer. Please. Summer, please. I know I am. Please. 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 Summer, please. Please, I don't know why you're laughing at me. I'm supposed to be going to Reese's to get it and now I can't. Please, Summer. What? No. I'll keep calling. No, son, please. Please, I'm begging you. Oh, I'm not begging. Please. You get a £3 extra because when I give you £5, I only owe you £25. Please, son. Please. Please. Yeah. I'm putting the other fish in with blue now because the fish and blue are playing together. Please, son. I'm begging you for mercy. Because I promise I'll be a better boyfriend. I'll be really this time. I'm not. Yeah? Yeah. Here you go. Hey. I'm putting that fish in there now.
Oh, what? I haven't even seen it.
The other one's in there.
And where is it?
Very high. Can you see it?
No.
Oh, there it is. Look, it's there, look.
Where is it?
Can you see it there?
Yeah.
Yeah, I'm gonna get the other one out. Look, that was massive, isn't that one?
Jeez, that's big.
It's scary, isn't it?
That is. Hi, Blue.
It's probably well out to get it.
Don't know why Blue looks so happy to see me.
Summer. I'm getting the fish right now. Have they got names?
Why do you name them? What? Some people have it. You get extra money and then I definitely get it also on Friday. Me? You get love. No, I don't need to anymore. Why do you think I'm not going to work? I'm still getting all my money on Friday. Still getting money on Friday. I worked last week. You get paid for the week before. Mama, please. No, don't have that time. Needs to be stadium, remember this. Well, I've got to do it in 10 days. Oh yeah, I made more money today. So today, I've made, let me refresh it. Today, I've made £57. Yeah. Pardon? What do you mean I'm going to funeral? Well, that's alright. Alright. Well, you're you're coming as well. What? Your mum said you can. There's not lots of people. Well, for now I'm just gonna put the fish in there anyway. I'm just gonna do it. Gonna watch me. Hold on. Right. Hello. Yeah. No. Hello? What? Get shrimps. We play games around. Who's under the pressure? Yeah? Pardon? What? Yeah? Yeah. Why? Then what? Yeah, okay. And this is the scary bit, this is where he runs out. That's right, he stayed in there. It's alright, Linton. Sammy, you're about to go mad. Huh? Because they're going in there, they're allowed to go in there. I looked online. Because I wanted to make sure they're happy. Someone, how did your dad get how did your dad catch that fish? How the fuck did your dad do it? How did he do it? Somewhere, they go faster than anything. Come on. Come on. Almost fucking jumped out, you see that? Just run into the net, just run into the net. No. I think there's only one way I can do this. It's fucking massive. No, there's only one way I can do this. There's no way I'm getting it with this. There's only one way and it's you're not going to like it, son. You have to drain the water out and then pour it in another box and then pour it in there like that. At least they give you this. I don't know why they give it to me, to be honest. They ain't even fucking opened it. I know you're scared, but it's alright. It won't work, Summer. It can't. You know how fast this fish is? I don't know how the fuck you'd have to do it with your hands.